A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we are starting afresh with this new setup which involves fractals along with min-max. And fractal is a technical indicator which we use to decide the possible turnaround in the trend. So we are counting on a possibility using the candles, 5 consecutive candles on any time frame whichever suits our purpose, and we look at the highest value in these 5 candles, and it should be in the middle, that is it should be flanked by the lower highs on both sides when we are looking for a possible turnaround on the sell side. And if we consider the reverse pattern, then the lowest value should be in the middle, and two higher lows should be on the both sides of that candle. So we will look for a possible turnaround on the upper side. So we will see. And if you want to use this setup, I think we better use it with some other indicator, and that's why I have decided to include the min-max in today's session. And for further description, you can do a bit of googling as well. And min-max, pretty much the simplest of all, the highest and the lowest value over a specified period of time. ATR mostly we use it for the optimizing purpose to give us a better entry and exit point for our trading. Before we go into the detail, there is a standard disclaimer. Here I would like to remind you of the fact that this is simply a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for maybe even months and months or even years, and also allow it to run on the demo account for sufficient enough time to get a clear cut idea of the efficacy of the algorithms developed here. And last but not the least, nothing in the webinar is to be construed as an advice to trade or for any particular setup. With that note, we go back on chart where I will try to explain to you the logic behind the setup which we are trying to build in today's session. So here, as you can see, this is the bullish fractal and this is the bearish fractal, but we are not exactly going by the naming of these fractals. Here, when we see that immediate high has been made, we will be actually looking for a sell trade, and when we see that a new low has been made and possible turnaround is probable looking at the price action, we will be looking for a buy trade. So even if it is called a bearish fractal, we will be actually looking for a buy trade, and even though it is a bullish fractal, we will be actually looking for short selling opportunity here. So we take these 5 candles as you can see here. I am purposely excluding this example here, and I will explain to you the logic behind it pretty soon. But now, if we want this pattern to be identified, it's fairly simple. Here, as you can notice, this is the lowest value if we take this bunch of 5 candles, and on both sides it is being flanked by these higher lows, and here the reverse of it is true. It is the highest value in these 5 candles, and on the both sides it is being flanked by the candles with lower highs. So that indicates that the price momentum has run its course, and from short term perspective, it can be even from the long term perspective, we can't really be sure at that point in time, but nonetheless turnaround is on cards. That is what these fractals indicate, and then we don't want to get involved at every fractal whenever there is a turnaround. So what we do, we have got these min-max conditions. When a fresh high has been formed, when the momentum has been strong and it has run its course, and Now, after a new high has been formed, if we see that some selling pressure is coming back, if the momentum is starting to subside, then during the initial hours of this setup, we will be looking for a selling opportunity. And similarly, we want the new minima to have been formed on these 30 hours. This is the minima of 30 time period, and the time period has been defined at 1 hour each. Here we can check out the description. So the input is low price and the time period is 30 of the hourly chart. So only when a new minima or maxima has been formed along with the fractal, we will be taking this combination of the setup and then we will go for a fresh trade. Now, suppose if we see that short selling opportunity has arisen, then the question is when should we get involved? What should be our selling price? At such instance, there are two scenarios actually in this setup we will be dealing with. So we are determining that 10 to 15% from these maxima should be the price range. And what we do the calculation, we take out the 15% of the ATR on the daily time frame. So we will be taking the ATR daily value of yesterday with shift 1, and then if we take the 15% of that, then that will be, we will deduct that 15% of the ATR from this maximum value. So our execution point will be defined, but sometimes the current market price can be beyond that value, it might be above that value, and at some time it might be lower than that value. So in both the instances, what we will do, we will utilize the different setup. If suppose if the value is within this 15% price band, then we look for a market opportunity, market trading. Whenever the price will drop below that point, this point which we will be defining using this ATR setup. So whenever the price will drop below that, the trade execution will happen, and if the price is below this 15% of the ATR range, then on the upper side we will be placing a limit sale order, and for that we will be keeping all validity of 2 hours, so that should be good enough. And similarly, the setup will be symmetrical on the buyer side as well, and here also we will add 15% of the day's ATR to this minima, and then we will get a exact point defined. And then if the current market price is below that value, below that point, then we will go for a market open whenever the market instrument's price will start to rise above that defined point. And if the value is above that point, then we will be placing a limit order on that point, so and that will remain valid for 2 hours. So let us do that now. So we straightly head to our Visual J Forex platform. First thing first, we will need to do the instrument subscription. For that, we need logical setup. We will need 3 blocks. Now we will also color code this yellow. Okay. So now we take the default instrument, and the default instrument should match the tick instrument, and the tick instrument should match the instrument which we will be defining, and that is going to be Euro USD. Okay. Then we define the position amount at 0. Position info, all position amount. That means no open or pending position is there on the account, so that many trades are not shouldn't be open at the same time. That is the logic behind defining these all position amount equals to 0. Now we need to bring in the indicator blocks, and the first thing should be, of course, the fractal. Fractal was okay. Fractal, we got it. We change it to 1 hour each. Then we take the min max value, min max. We will need 4 blocks. We make it hourly. Here, this we change to the ask side and high price. We need to take 2 more min max blocks now to define the minimals. we change this time period to 1 hour. Okay, and first thing we make it bid and the low price. And now we want not all fractals should be counted. Now as you can see, we want the trading to happen only when a fresh maxima and minima has been made. So what we do, we look for instance where the current minima value. So suppose here this fractal has been formed, we consider this minimum value of this fractal, and then we also look for so our trading can happen, means condition will be fulfilled from 15 GMT onwards. So we can take the one more condition, that the current minima should be less than at least it should be less than the minima 5 hours back, and I think this condition should be good enough, as we will get the possibility of keep looking for the entry point in next 2 hours. And what will happen, so here this will be the, after this minima has been formed, it will be first, second, third hour, and fourth and fifth. So if we go for this combination of the current minima value, which needs to be compared to the minimum value 5 hours back, that will limit the validity of the trading system. And so here, since the current minima will be equal to the minimum 5 hours back, no trade will happen even though fresh minima has been formed. So we look for this setup, and for that we take this combination of shift 0 with shift 5. So let us make this shift 5. Bid and the low price. That's good. Now we will need to bring in the ATR as well, and with ATR, as we more often than not we do a lot of calculations. So today's session is no exception. We will need to take the ATR and then a lot of calculation expression blocks as well. And the ATR will be found in other section, I guess. Oops, what happened here? Uh-oh. Indicators, and here we got the other. We make it a daily time frame. So we change this time frame to day, and then we take shift 1. So here we got this. The output values. Okay. Now we need to do the calculation 15% of the ATR. So we bring in the calculation expressions. Indicators are fine. We need now the mathematical components. Oops. Okay. In most of the algorithms which we have developed so far, we have used either the market open or the pending open. This will be the first instance where we will be utilizing both the setups depending on the prevalent situation. And here we take the ATR value and we create a fresh variable which we can name as ATR if difference, and it will be 0.15 15%. So we are going to do this multiplication. Yes, it has been defined well. A1 into A2, and we get ATR pip difference. Okay, so we got this. Now next calculation would be defining the point of execution, which will be either 15% lower from 15% of the ATR, that is, and it should be less than the maxima by this amount of 15% of the average true range value. And suppose if we are looking for a byte rate, then it should be above uh, this 15% of the ATR range from the minima value, and then the pending open will happen. If it is within the range, then the market open will happen whenever it starts to rise. So let us define that point here. We want to take the maximum price and current value will need to be taken into account. So we do one thing, we take this maxima range first. First we define the point for going short, and it will be oh, shift 0. We take this value actually, and there it comes. Maxima 17. We need to take one more calculation expression, and that will be from the lower level of the low value. We take the current value actually of minima 19, and then if we are taking the minimum value, that means we are looking for a buy trade after a fresh low has been formed and fractals are pointing to the subsiding of the acute selling pressure. So here in minima we will need to add this, and it will be a 1 plus a 2, and it will be the buy execution point. Now is the time to define the sell side. For that we take the maximum of the high price current value, and that will be maxima. Oh, we have already got maxima 17. Now we need to take the 15% of the ATR. So here comes the ATR. So here we get this maxima value, and we deduct it actually by the 15% of the ATR A1 minus A2, and it will be our sale execution price SE. So as I see, we are also running short on time. So in tomorrow's session, we will be back to do the completion and further optimization as in when needed. So that's it from my side for today's session. I would like to thank you all for joining in. Have an excellent day ahead. See you tomorrow. Goodbye.